break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again for TWIFO. This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. So what's lighting up this week in copper or lean hogs or class 3 milk or and the futures rundown. Always looking to add more arrows to our quiver in that arena, which is why I take the step, listeners, to come all the way down to these conferences so you don't have to. But look forward to some interesting stuff coming from this conference on the network in terms of guests and content and interesting discussion topics in the weeks and months to come. And of course, if you want to check out all the cool stuff we have cooking on the pro side, only one place to go, theoptionsinsider.com/pro. is the place to go to get more. And of course, someone came up to me at the conference and they were very apologetic. They were nice. They're like, we love all your content. Been listening for years. He's like, I don't have the time for the pro. And they felt very bad. I looked at them. I said, that's fine. It is not for everyone. It's for the people who are able to add that content into your lives. And of course, for those of you who demanded it, and a lot of you came out, especially post pandemic, and said, we want more. We want more. It is for those folks. So if you can't swing it, if you can't make it work in your schedule, guess what? That's fine. It is not for everybody, but if it is for you, theoptionsinsider.com/pro is the place to go to learn more as we keep on heading right on into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side over there at CME Group this week. And given all of the kind of whipsaws and shocks to the system, and certainly all the headlines have been talking about, downside, red, the major equity indices are down for the year, and a lot of other asset classes not having great years so far. You might expect this chart to be a lot more red than it actually is. Remember, if you follow us over there at Options on the old Twitter, you can get your hands on this chart as well. It's one of the cool pro charts that we give you access to completely for free because we like you folks. Otherwise, you have to pay for the pro over there at Bantix, which, by the way, if you are into futures options, BANTIX.com, the place to go to kick the tires and light the fires. If you did that, you would see we are, I would say, maybe 55-45 red over green. That said, our biggest percentage mover this week is clearly to the red. So maybe you can probably guess what that is, listeners, as we get right to it. We'll start on the green side to keep things positive this week. Then we'll get all kinds of crazy to the dark side, listeners. Number 5 to the green this week, listeners. We're heading out to our old pal, the livestock. In particular, we're going to a little bit of the old feeder cattle, up 2.38% this week. So an interesting week out here on the livestock front. Number 4, it's live cattle, up 2.7%. So a wild week in the livestock, listeners. Number 3, keeping it in the esoteric products. We're going from livestock to lumber. Keeping it in the L's, listeners. Lumber up 2.93%. Is this the return of lumber? Are we starting to see lumber back on the radar again? You know, back in the early crazy days of the pandemic, I've said it before, lumber was the most volatile asset on the planet. You can forget your crypto. You can forget your meme stocks. It was dead trees. And unfortunately, there wasn't a lot of options paper to go along with that, which is disappointing, I know, for a lot of you, myself included. But that has indeed been the case. Number 3 this week, lumber, up 2.93%. Number 2, we got a theme going here, listeners. Unlike the livestock put up some volume numbers, so I shouldn't besmirch them. But lumber, and then number 2, oats, another product that moves quite a bit, yet for whatever reason can't put up an options print to save its life. You know, if you get 3 contracts a week, 5, you're ecstatic. So for whatever reason, oats not an option stalwart yet. Number 2 to the light side this week, up 3.21%. It was number 4 in the other direction last week, up 4.93%. And then the number 1 light side mover, kind of an interesting week, some esoteric products making it onto our radar. No, it was not a rough week for rough rice. I can't even say it anymore, listening. It was a heck of a week for rough rice, up 5.12% out here, listeners. So a banger in the rough rice category. Now to the dark side we go. Number 5, 3.2% to the dark side to break in to the bottom 5 this week. That gets you to our old pal, the NASDAQ 100 E-mini, off 3.2%. So a rough week for tech stocks out there this week, listeners. Number 4, keeping it in the equities, it was the communications sector, off 3.7%. Number 3, man, there's a lot of equities dominating our red this week, listeners. It's another sector of the S&P, the consumer discretionary sector, listeners, off 5.8% for the week. Number 2, listeners, Nat Gas, our old pal, the Widowmaker itself, off 7.28%. It was number 1 in the other direction last week, up 9.18%. And the number 1 dark side mover, I asked you earlier in the show, can you guess what it is? If you think about it, you could probably figure it out. I'll give you a hint. Uncle Mike's not a fan. It is Bitcoin, off 8.35% this week. So a lot of red on the crypto screen. Before you get all hot and bothered, I'm looking right now, listeners, the micro Bitcoin contracts on CME have done less than 4,000 contracts this week, 3,781. And the big contracts have done about 1,100 contracts this week. So unfortunately, it doesn't seem like we're going to be hanging our hat in the crypto unless you be intrigued by Ether. The big Ether contract's a whopping 458. So it is our number 1 dark side mover. Unfortunately, it doesn't seem like we're going to be hanging out there this week. But, you know, before we get to some individual products, we have to get into a little bit of the CVOL movers and shakers. And you know what? Might be an interesting time to look not just at the week, but also look back at the year that has been so far out there in the realm of CVOL, listeners. So we're going to do that. We have 2 reports in front of us. You can run these for yourselves, CME Group and CVOL, in whatever browser you're rocking. And then for the first report, you want to set the high-low range to one week. You want to go to the aggregates tab, by the way. You want to look at all the aggregate CVOLs. And then you can also set it to year to date as well, so you could see a little bit of the evolution of the products over the course of this past year. Let's start on the weekly front, listeners, and top of our list are the ag products at a 20.34. They're up 0.61 today, so a little bit of a lift out there in the ag products today. On the week, they've had a range of 19.73 to the downside, 21.07 to the upside, so hanging out towards the middle end of that range. Of course, if we expand that purview, go out a full year to date now, see how ags are shaping up on the year so far, the low is exactly 18. That's kind of interesting. And the high, 23.09. So still kind of hanging out right towards the middle of that range so far year to date. Below it, we have the aggregate commodities CVOL 34.92 unched on the day. That is also the low for the week. The high, 36.79. If we dial that slider back to year to date, listeners, we see the commodities aggregate CVOL has a range of 29.05 on the low end and 44.68 on the high end. So over a 15-point range so far year to date for the aggregate commodities CVOL. So clearly some vol on the year so far for commodities. Below it, we have the aggregate metals CVOL, 17.92 today, off 0.16 today. The range for the week, 17.37 to the downside, 18.17 to the upside. And in terms of for the year, obviously a little bit wider range, 15.36 was the low for the year. The high, 19.84. So interesting, over a 4-point range in the metals CVOL. Again, metals not known to be great bastions of volatility. Below it, we have a product complex that is known, I should say, to exhibit a little bit of vol, and that is the energy, listeners, the energy aggregate CVOL. Right now, 52.25, off about a quarter of a point today. That is also the low for the week. The high, 56.49 for the week. If we expand that to look year to date, a much wider range, over a 30, actually about a 31.5-point range so far for the year, listeners. So energy, no slouch when it comes to vol, listeners. 42.41 is our low so far year to date. The high, 73.85. So again, over a 31-point range so far year to date. Below it, we have the Treasury price vol. Treasury price vol coming in aggressively today, 6.49 as we kicked off the show, off over 0.75 of a point, 0.77. They may not sound like a lot, but when you're starting around a 7 handle, 0.75 of a point is a heck of a large move. So they are killing Treasury price vol today, listeners. That is obviously the low for the week. The high was actually 7.46. So we've almost had a 1-point range, 0.97 to be precise out there, a range on the week in Treasuries from a price vol perspective. That is a heck of a lot of vol this week. Obviously, all the tumultuous shocks to the system we're seeing, the economic data and the tariff debate really weighing on Treasury vol out there this week. For the year, Treasury price vol, the low is actually a point below where we are right now, 5.48, and the high was 7.46, so almost exactly a 2-point range so far year to date, and giving up 0.75 of a point just today. So a big mover in Treasury vol today. Below it, we have the FX aggregate CVOL, 9.25 today, off about 0.75 of a point today. So FX vol also kind of falling out of bed today. That is the low for the week, the high 10.02. So about a 0.75 of a point range for the week in FX. If we expand that purview so far year to date, the low was 7.83 and the high 10.59. So that's a pretty decent range so far for the year in FX. Again, we're talking trade wars left and right. So FX clearly going to get caught up in that, which is why we've had quite the range on FX CVOL. And bringing up the rear on our list today, Treasury yield vol, 117 and a third, off 13 2/3 points just today. Like we said, they're coming for Treasury vol today, listeners. On the week, that is the low for the week, the high 133.46. So they have annihilated Treasury yield vol this week. On the year, it's an interesting story out there. On the year, the range has been 96.01 to the downside year to date. The high, 133.46. So it hit its high for the year so far this week before giving some of that up. So a wild week and indeed a wild year so far in CVOL. And when we're talking about wild products, There's one that dominates the list seemingly every week. It is number 2 again this week. It is inescapable. It is nat gas. So let's get to a little bit of energy right now.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, time to talk the Widowmaker itself, a.k.a. nat gas. You know where to go to run these reports for yourselves. CMEgroup.com/TWIFO, TWIFO. Once you're there, go into that drop down. You're going to go down in asset class, 3 slots to energy. And then in product family, 3 more slots to nat gas. And then bam, you are off to the races. And I used to talk about, we used to expect 400, 500,000 contracts on a decent week in nat gas. Throw all that out the window now. Nat gas is a different beast these days. 1.287 million contracts on the tape already. So fully 3x what we used to expect in a decent week. So nat gas, a very different beast these days. And of that, well over 1.3 million contracts, or 1.287 million contracts, listeners, 32% of it going up in the April contract that has about 13 days to go, which for nat gas these days is actually fairly long term. We've seen a lot of 0-day and front week paper of late. So going out a whopping nearly 2 weeks is actually interesting. What is the vol? You might be asking. In about 2 weeks to go nat gas, it's about 63 even, off about a third of a point this week. So nat gas obviously still frothy. Now, interestingly, if you go out to the contract expiring on March 24th, 2 days before this one, that is trading at a 107 vol. So the vols are kind of all over the place right now in the near-dated nat gas contract. Some of that you have to read with a little bit of a grain of salt. After all, some of these, there's not a ton of paper going up in some of these. And also we have, once you get that close to expiration, vol and gamma become pretty much synonymous out here. But interesting stuff nonetheless. In terms of skew, let's see, how are we shaping up out here in April? Last week, the puts were 4% cheap. This week, getting cheaper, 5.9% cheap. The calls last week, 6.9% bid. And this week, they're pretty much treading water, about 6.5% bid. So not a huge change on the call skew, but the puts are getting a wee bit cheaper. And what is leading the dance out here, listeners? Well, it was the puts. It was the April 3 3/4 puts. Remember I said we're hanging out just a tick shy of $4, $3.99 right now. So makes some sense that we see some fairly tight puts going up this week. It looks like folks were also bailing on a lot of these. Looks like they bailed on about almost 18,000 on Monday and about 14,500 on Tuesday. So they were buying these when nat gas was at a higher level. Makes some sense they might be getting the heck out of Dodge. That would also probably account for why our put skew is getting a little bit more discounted this week. On Tuesday, we saw 10,500 going up, slightly opening, and today about 4,700 against an OI of 31,000. So there's still quite a bit open on this strike with less than 2 weeks to go. Right behind it, listeners, number 2, if you're saying, you know what, 3 3/4 puts are not doing it for me, I want at the money, now slightly in the money puts, well, nat gas has you covered this week as well, with the 4 puts also in April going up 43,000 times this week. Looking at it, looks like it does line up pretty decently for some vertical action on Wednesday, with 14,500 of the 3 3/4 puts going up at the same time. So we had about 14,800 of the 4 puts. However, if that's the case, it looks like paper was bailing on both legs. Either way, closing looks like on both legs on Wednesday. On Monday, which was the big day for the 3 3/4 puts, nearly 18,000 trading, about 12,300 of the 4 puts going up, mostly opening there. Chances are, if there was some roll or vertical action, we wouldn't see a lot of people opening on the 4s and closing on the 3 3/4. It looks like how it might have gone up. So chances are it probably was unrelated paper, at least for the lion's share of it. And then Tuesday, we saw about 12,500 going up on Tuesday, mostly opening on the same day that there was about 10,500 opening of the 3 3/4 puts. So if someone wanted to dive into that put spread, they could have been opening on both legs on Tuesday, took it off a day later for more size even. And today we have about 3,700 of the 4 puts going up. So either way, the 4 puts and the 3 3/4 puts dominating our tape out here this week. It makes a lot of sense. Those are the pretty much at the money and near at the money put strikes. We've also seen a lot of red on the tape, so it makes sense that folks will be fixating their liquidity on the put side, listeners. That said, there was some paper to the upside, listeners. How about some April 5 calls going up over 40,000 times this week as well, listeners? They went up 43,500 times. So actually, technically, they should be number 2, edging out the 4 puts by about 135 contracts. Looks like in this case, though, folks were giving up the ghost all week. The big day was Wednesday, 18,400 closing there, 13,300 on Tuesday also closing, and about 9,700 on Monday also closing. That could account for some of the reason why maybe the call wing is a little bit more depressed this week than last week if folks were long a bunch of those and they got the heck out of Dodge this week, which looks like it probably was the case when it comes to this upside. Folks are usually buying that in upside. We saw a lot of buying on the 4 calls a few weeks ago. Those worked out pretty well. So maybe some folks had rolled to the 5s, or they were just getting a little bit more optimistic and wanted to have some 5s in their back pocket. Either way, it looks like folks pretty much bailed on most of those this week. That said, there are still 46,000 open on that strike, only 2,000 trading today. So again, this is why nat gas is such a wild beast. You're talking 47, 43,000 to 43,000 just in the top 3 contracts. I mean, it's not nat gas, it's not 10-year, it's not the E-mini, it's not 3-month SOFR. But outside of that, really, there aren't a lot of products that can hang with nat gas. We talk about the metals, talk about others. I mean, we're talking about as many contracts as probably went up in silver this week in just each of these options series here. So a lot of paper out here to be found in nat gas. Let's go a little bit, see if we see anything else interesting and or aberrant. If we go out to the May contract, that has 43 days to go. That future is at 4 1/4 right now, so fully 1/4 of a point higher than the April contract, going away in 13 days. The 5 calls were trading pretty actively out there as well. Let's see. So it's possible some folks were rolling out there. Nope, they were bailing on the 5 calls in May as well. They traded 39,000 times this week. The big day was Monday, 17,000, 8,200 on Tuesday, 9,700 on Wednesday. They were closing on all of those days. So folks getting the hell out of Dodge on the 5 calls. 3,800 today against an OI of 23,000. So there's roughly half as many of the 5s in April still open as there are, or I should say in May, as there are in the April calls. So kind of interesting stuff out there. If you go a little bit farther out, 3/2 puts in June, going up about 24,000 times this week, including a block of 12,000 exactly today. That's kind of interesting. The OI today, 20,000. So they could be bailing, but at June, they're probably opening. They were opening on those the rest of the week, 7,100 on Wednesday and 2,800 on Tuesday and about 2,100 on Monday. Let's look really quickly. Let's see if I can pull it up quickly. That's one of the problems, listeners, is there's so much flow, it's sometimes hard to get into. There we go. Let's see if I can pull up. There's so many energy products as well. I have to sort by just nat gas and then just the options. We don't want the futures, not today. Let's see if we can find what we were looking for. These are the 3/2 puts, listeners, going the way of the dodo in June. Let's see if we can find a price for these bad boys here, listeners. Again, if you have the premium tools over there on Bantix, you can do a lot of this scanning through the blocks. That's exactly what I'm doing right now to see if I can find a price for you folks. I see 3 3/4 puts going up for 3/8 paper, buying those out there in August, but that's not what we're looking for, listeners. We're looking for the 3.5 puts. I see a lot of 3 3/4 puts going up in May as well, going up for 11 cents. These are some interesting prices. Let's look here. 3 1/4 put. Here we go. 3.5 puts in May. They went up for 6.2 cents, listeners. So it looks like paper was indeed buying them. Looks like they might have done a vertical, the 3/2, 3 put spread. In this case, they did it for about a nickel. So are you a buyer of that for a nickel going all the way out to June, listeners? Buying those puts, not a easy outlay. if you think natgas, I mean, it is summertime. Usually we expect to see a little bit of seasonality kicking in over there in natgas. Is that going to get us below the 3.5 strike? It's like somebody might be thinking that is the case as they were loading up on some of those out there. Have you been slinging any natgas, listeners? Hit us up. Let us know.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, we're looking here, listeners. It's been an interesting week here. But since I'm looking here for the rest of so many of the other movers and shakers for this week, don't do any options paper. We talked about Bitcoin, oats, lumber. We can go to the cattle if you folks are so intrigued. Tell you what, because it is lighting up our tape this week, we will do just that. We will go to the ags, and then we're going to go to the livestock. So off to the ags we go, listeners. And once we're there, listeners, we can pick our poison. We can go to live cattle, or we can go to feeder cattle. Live cattle doing 89,000 contracts this week versus 22,000 for feeder cattle. So guess where we're hanging our hats. And of that 89,000 contracts, the lion's share going up in the April contract has about 22 days to go. Nearly 40% of the paper going up there. If you're saying to yourself, where are live cattle futures trading right now? They're the front future 201.57, up about 1.3 points or about 2/3%. Just this week, obviously, if you go back to the end of our show last week, it's up nearly 3%, about 2.7%. In terms of what vol out here in live cattle, not explosive, I think is the charitable way to put it. 13.5 in that front future, up about 0.13 today. If you go out a little bit farther in the term structure, it looks like the juiciest it gets is about a 15.14 out in June. That has about 85 days to go. So live cattle, not exactly a bastion of vol in terms of skew. Last week, the puts were 7% bid, so they were leading the dance. This week, they're looking even juicier, 10.7% bid. The calls last week, 4% discounted. Nobody wanted them. This week, they want them even less, 7.7% discounted. So we got a healthy bid to the puts, a healthy discount to the calls. Looks and sounds like an equity to me, listeners. Out here, we got the big dog this week are the April 196 puts. Again, we're at about a 201.57 in that front future. It's the 196 puts, so a little over $5 out of the money puts. Going up about 7,500 this week. It's like paper actually bailing on a lot of this. They closed 4,000 on Monday, 1,500 on Tuesday, and about 1,000 on Wednesday, and almost 1,000 again today. There are still about 4,600 contracts open. And then number 2, right behind it, we have the 198 puts, so closer to the at-the-money puts, going up about 4,800 times. Looks like their big day was Monday as well, about 3,000. So we could have had potentially a 198, 196 put spread going up, where obviously if the underlying is rallying a bit, maybe they want to keep their protection a little bit tighter, so they roll from the 196s up to the 198s. That would also be consistent with the size. We're talking 4,000 versus about 3,000. So obviously they're doing less on the opening leg or the second leg, which would be indicative of a hedge that hasn't exactly worked out for you. So you're doing less. And I get it. It makes sense. It's not exactly a house money roll. But also, if you're long the futures, you're not too mad about it at the end of the day. So you could have taken some of that futures profits and put them to work having an equal hedge. In this case, if that was indeed related paper, it seems like they're content to do a little bit fewer on the tighter puts, but get tighter protection as a result. I got up 1,500 of each going up on Tuesday as well, so it seems like that roll up going on again on Tuesday. So folks obviously rolling up their protection, getting a little bit tighter this week out here in everyone's favorite live cattle. Let's just scroll around a little bit, see if we see any other interesting and or aberrant prints. Let's go all the way out to August, listeners. Let's go out to the August pars, the 200s. That future, by the way, at 195 and 7/8. You don't see that very often. It's the 200 calls went up about 3,100 a week. It's like paper was bailing on those, so maybe they're giving up on their prospects to hit me. 200 by August, it doesn't seem like that crazy of a move to me. Or maybe they were overriding them all week and now they're getting spooked, so they're getting the heck out of Dodge. Well, let's look really quickly, see what's been going on in the call wing out there. It was 6.6% cheap. Now it's 9.3% cheap. So calls getting markedly cheaper out there in live cattle. So that's probably another indicator that they were probably selling these bad boys. 1,200 on Monday and 800 to 300 every other day the rest of the week. All closing. Looks like folks bailing on these par calls in live cattle. But you know what, folks? We never bail on you. It's time for a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right. We have a fun question of the week right now, asking you quite simply, obviously equities were lighting up our tape to the dark side this week. 3 of our bottom 5, all equity related names. So we're asking you, we're hearing a lot of chatter about BTFD and the fact that BTFD might be dead, at least for the time being. So we thought we'd put it to you. Quite simply, is the BTFD trade dead? Yes, no, or I'm just out, I'm in cash. This is way too spooky for me. And right now, listeners, we have no, I'm buying more right now, 43.5%. So taking it ever so slightly, followed by number 2, yes, BTFD is dead, 39.1%. And I'm out, I'm sitting in cash, 17.4%. I would have to assume if you're sitting in cash, you are waiting for the right dip to buy back in. So I guess you might have to add the I'm out, I'm in cash to the BTFD crowd. So maybe they might be more of a no. They're just waiting for a very big dip if you're sitting in cash. I'm assuming you're not going to be permanently in cash for the rest of your days. So interesting results. Get over there at Options and make your voice heard. If you also look at our question of the week from last week, we were asking you about vol. Vol is getting a little spicy out there right now, listeners. And we said, we're seeing a little spice in the market. Do you think this has legs, or is it just a dust up? Quite simply, where do you think VIX will close at the end of March? Going to be spicy, north of 20, mild below 20, or it's too spicy, I'm going to cash. And 53.8% of you said it's going to be mild, it's going to be below 20. So slightly more than half of you. Spicy, north of 20, 41%. And too spicy, that's it, I'm out, I'm in cash, 5.1%. Speaking of spice, we had a lot of people chime in, including our pro member, Age Adele Aquarius, with his GIF of the Spice Girls. A lot of you chimed in with Spice Girls related memes and GIFs, which led to our conversation just earlier today on the option block, which led to us having the, of course, ever topical, ever top of mind debate. Quite simply, who is your favorite Spice Girl? Gave you 4 choices. Well, I guess there's technically 5 in there with the 2-parter at the end. Is it baby? Is it posh? Is it scary? Or is it ginger/sporty? We had votes all over the place in our live chat for all of the above. I have to admit, I forgot that that sporty even existed. I thought there were just 4. So there you go, listeners. I'm not up on my Spice Girls, clearly. But we had votes all over the place in the live chat. Right now, you folks in the audience over there on Twitter, 50% are going the way of baby. So clearly, baby running away with it. 25% for posh, and then 12.5% each for scary and ginger/sporty. That's going to do it for us this week from the Southern Studio for This Week in Futures Options. Not going to do it for us for the week, though. I'll be back here tomorrow from the Southern Studio live, talking all things vol with Dr. Vix and an assorted cast of characters. Should be a fun time. You may have noticed there's a little bit of vol on the screens right now, so make sure you join us tomorrow for volatility views and come back afterwards. One final time for the week to talk all the weird, the wild, the crazy paper that's lighting up our tape and what trades we have on as well over there at Options Oddities, the place to get your hands on that. Of course, theoptionsinsider.com/pro, the place to go to join the fun. Then I'll be back in the Chi-Town studio on Monday for the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.